Recording in progress.
There we go. All right, welcome everybody. We are obviously here today for Ticker Talk, as usual, every other Thursday. If you're watching the recording, hope you enjoy this. We'll just quickly go through our disclaimer. So everything we do here is for educational purposes only. We are not investment advisors, and we do not provide investment advice. All statements made here today are the personal opinions of myself and are not to be considered investment advice or advice to buy or sell any security. All trading and investment decisions are done at your own risk. I think everybody knows who I am, Kevin in the Discord. This is all about me. We'll just move on from that in a sec. Actually, we'll just go to this page right now because I want to talk about the yield curve inversion that you're probably hearing quite a bit about. I mentioned this in the email on, the email and the morning briefing on Monday. And so just want to provide a little more color to this, a little more detail here, some of the things that I'm looking at. But first, Jay asked a question, says hasn't been participating lately, but this is unusual, right? I think, Jay, are you talking about the action into the close today? And hi, Ken, welcome. Yeah, okay. Yeah, we can get into that in a little more detail in a few minutes when we start going through some of the charts in the market itself. And I did actually mention in this morning's briefing that we should expect some unusual volatility, in the afternoon or into the close. I'm a little surprised it sold off this hard. I actually thought, about an hour before the close, I thought we were going to pop up, and we did kind of pop very briefly. Shortly after, Disguise This Guy and myself talked about this briefly, and I said that, yeah, I think we're going to go up and we're going to rally into the close, and we're going to rally tomorrow. I still think we're going to rally tomorrow, but obviously I was wrong about going up into the close. We did have a very brief rally, and then it just started selling off like crazy. So you got to remember what today is. Today is the last day of March, right? So it's month end and it's quarter end. And institutions love to do window dressing on their portfolios coming into the end of the quarter. They'll sell off a bunch of stuff that they think looks bad in their portfolio so that when you get your statements and everything, you don't actually see it. You don't see that they have been hanging on to, I don't know, what's the stock that's down a lot? I mean, probably pick anything, right? If there's something that's really, really underperformed, over the last little bit or through the whole quarter, they want to get rid of that. They don't want that on the books. They don't want you seeing it. So there's a lot of that going on usually coming into the end of the quarter. Also in the end of the quarter, they'll buy things that they want you to see. They probably want you to see a lot of Apple on the books, maybe. Although that sold off too into the close. So there's a lot of kind of shenanigans going on the last day of the quarter, and especially right into the close. It is a little surprising that they all seem to wait, until the last half hour, to sell off a bunch of stuff. That's a little odd, but that's what they decided to do. And if we look at the after hours today, we'll see that, they started buying them back. So we'll look at that in a sec. But the first thing I wanted to go over really quickly is this yield curve inversion that you've probably been hearing about. If we take the one that everybody's watching, and it's the one that's pictured here on the screen, is the 10-year Treasury yield minus the 2-year Treasury yield. Okay, and when we do that, we get what's called the yield curve, the difference between the 2-year and the 10-year. Now, The 10-year, because that's a longer dated treasury, its interest rate or its yield should be higher than the shorter dated one, than the 2-year. That's the way things normally go, and you can see that on this chart. The black line there on the chart is 0, and when it gets below that black line, that's what we call a yield curve inversion. And you can see that that happened late in 2019, and you can see right now, you know, ever since what was this? This would have been back pretty close to a year ago. Ever since then, the 2-year yield has been catching up to the 10-year yield, or this curve has been doing what they call flattening. Okay, when the 10-year yield is outpacing the 2-year yield, they call that steepening, and that's what's happened ever since, you know, near the end of 2019. The yield curve was steepening, and since the middle of last year, the yield curve has been flattening. And now we are very close to the yield curve inverting. And in fact, earlier this week, for about 10 minutes or so, the yield curve did actually invert. So why is this so important? Well, I'll show you on the next chart here. All right. So this is essentially the same thing, going back much farther in time, okay? We're going all the way back into the 70s here. And each one of these red arrows is a yield curve inversion. These gray boxes are recessions. So you can see how good the yield curve inversion is at predicting a recession. So we had this one back here in the 70s, you know, in the late 70s, predicted this recession in 1980. We came out of the recession, and then we went right back into a yield curve inversion, and then there was another recession, a longer recession. You know, we had this yield curve inversion here in the, I guess would have been near the end of 89, predicted this recession in the early 90s. We had a couple of inversions. It's interesting that this inversion right here didn't really predict a recession. It corrected itself, and then we had another inversion, and that one did predict the recession. A couple of years later, these recessions normally come on average about 18 months or so after the inversion. And we can see another one here, predicted the 2008 recession. And this is the one that happened in 1999. This is why in late 99, early, or not 99, sorry, 2019, this one here in late 2019 predicted the recession that we had in 2020, although really that was kind of a COVID recession, wasn't it? But it's interesting that there was still an inversion there, very, very brief one, and you know, very minor inversion. And that's why people were kind of freaking out towards the end of 2019 and then early in January of 2020. And that's why I was so quick to pull the trigger in January of 2020. I mean, I was already reducing risk because of this inversion, but just a little bit, right? But once the COVID thing came along, I'm like, okay, I'm out of here, and sold off my entire long-term portfolio in the middle of January. Hey, Richard, welcome. We were just talking about the yield curve inversion and how it predicts recessions. And you can see here that the yield curve is about to invert any day now, probably. You know, that means it's pretty likely. It's a pretty good predictor of an upcoming recession. But is that really actually bad for us? Let's go to the next slide. And so this is really cool. The guys at Quantifiable Edges, they're really good at doing back testing on sort of market events, and they pump out some really cool stuff. They have a free email, and that's where I got this from. Free email where they, you know, send out some of their research. They're usually only sending out an email every couple of weeks, so don't worry that you're going to get spammed from them or anything like that. I think once or twice a year they'll send out a special for their service or something. So they're very, very low on the spam scale, and the stuff they pump out in these emails is so interesting. And this is one that I got today, which was excellent timing, because I did want to talk about yield curve. So what are we looking at here? This is back testing on the 10-year minus 2-year yield curve inversion when it occurs for the first time in at least 6 months. So that means there's been no inversion for the last 6 months, right? And so this is the S&P 500 shown via the SPX index. The forward returns are shown from the time the yield curve yield curve inverts, and this goes all the way back to 1976. And you can look here. So these are the returns, and he's shown a bunch of different time periods, right? 21 days after the yield curve inverts, 42 days, 63 days, and so on and so on and so on, right? So 378 days, that's about a year later, and this one here, 504, that's about a year and a half later, right? Or sorry, these are trading days. So this 252 days, that is a year later. And the 378s would be about a year and a half, and the 504 is 2 years later. So you can see this one that happened in 1978. At first, it wasn't very good, and the SPX drew down as much as 10%. And that would have been 3 months later. And then things started to improve. And a year later, the SPX was positive, and just continued to move along its merry way. Actually had half decent returns from then. If we look at the one in 1988, we had this yield curve reversion, and the market didn't care one bit, right? A month later, the S&P 500 was up almost 3%. 2 months later, it was up almost 6%, right? And looking pretty good here over the longer term. Pretty much the same thing goes for 1998. The one that got a little painful farther out was the one in 2000. But there was no effect at first. It really took, you were fine for 6 months, up to 6 months later, and then it really started to kick in a year and more down the road, right? And did get a little painful, at 2 years out with a 23% drawdown. The one in 05, no effect there really. And then here's the one in 2019, and essentially no effect. These time periods, and a little bit is that these time periods it's showing kind of skipped over. The market crash and recovery happened so fast, it fell somewhere in between these periods, right? And you can see that it did start to go down here. At 6 months out, it was only up 3.82%. But then by the time we got a year out, we're up 21%, right? And this is, the whole COVID recovery thing going on. So, there's a lot of hype in the media about this yield curve thing, but we can look at this and we can see that the reality is this is not a whole, not something we should be really worried about as far as our investments go. Recessions suck because people lose their jobs. Some people lose their homes. Bad things happen to people, and I'm not discounting that. Recessions are bad for people. They're bad for the economy, but they are not necessarily bad for the stock market. And that's what I'm trying to show you here. So, if this is something that you were really worried about, it's not something that you should be losing sleep over. You should be somewhat cautious, but I don't think this is no time to be selling everything and closing out all your positions and everything like that. And it does take time. I think the earliest a recession's ever come after one of these inversions is 6 months. But like I said, the average is closer to 18 months. So hopefully that makes sense. Does anybody have any questions on that? If you do, go ahead and feel free to either unmute yourself or type your questions into the chat. And at any time through the session today, always want to see your questions or hear your questions. So don't be afraid to ask. There's no stupid questions, only stupid answers. Okay, don't see any questions, so we'll just keep moving along. So we're going to take a look at the markets. Oh, and I wanted to ask you guys something, actually. I know that these sessions tend to go a little long, and I've been thinking about ways that we can still kind of cover all the material that we want to go over, but shorten the sessions down a little bit. I was thinking actually that maybe this sort of market overview that we do, which I think is really important to do, and anytime I'm going through looking for opportunities, going through a bunch of charts, looking for setups and whatnot, the first place I start is in the major indices and the sectors and stuff like that. I want a really good handle of what's going on in the market. So that's why I've been doing this. I wanted to show you guys my process. But I was thinking about splitting this up and maybe doing, like over the weekend perhaps, doing a video where I'll analyze the market like we're going to today, and just shoot that video out. So it wouldn't be a live session. I'd just be going through the market and describing what I see and looking at a bunch of charts, recording it, and then sending out a video for you guys. And then when we do ticker talk, we could essentially maybe take a quick look at the indices, see if anything really important happened that day or over the last couple of days. Maybe look at that specifically, and then get right into your tickers. What do you guys think about that? Okay, Ken likes it. Yeah, so anybody who's here watching live, if if you want to, give me thumbs up, thumbs down, whatever, if you have an opinion on that idea. And if you're watching the recording, shoot me a message in the Discord. Either DM me or hit me up on one of the channels. Maybe the general chat, the general chit chat channel, or perhaps I'll send a message out in the suggestions. Asking and seeing what people think about this. But Jay, thanks. Glad to see you like that too. Shatika says, the length is good for me. The only downside is I'm in the Midwest and I'm still at work when these sessions happen. Okay. So I can only jump in when I can sneak away. Well, apparently, Shatika, you're not the only one here who's at work right now or sneaking away. Yeah, okay, you think the weekend sort of market overview idea is cool as well. All right, so that sounds good. It sounds like we have a bit of a consensus here, at least among the people who are watching live. So I'll maybe not this weekend, because we're going to do a market overview today, but maybe for next weekend I'll do a market overview session on the weekend, see how that goes for me, and see how you guys like that. And we'll see how that works. Okay, so let's get into taking a look at the markets. Oh, that's what chart I want to look at. We don't want to look at copper just yet, though. So let's look at the S&P 500. All right, so you can see that, over the last couple of weeks, what was our last session? I think our last session was on the 10th. Is that right? No, must have been 17th. Okay, our last session was this day here. Okay, so as you can see that since our last session, we've continued to go up. We had this nice gap up here, and kind of a gap and go. We'll actually see more of a gap and go when we look at IWM. But this is nice. And actually, DTG pointed this out in the Discord. Was asking about this being a gap and go, and that was really good. That was a really good observation on his part, because it certainly looked like it, or not a gap and go, sorry, a breakaway gap. And it certainly looked like it was going to be a breakaway gap. I mean, this is exactly how breakaway gaps happen, right? You have an uptrend, clearly we were in an uptrend here, and then you have a gap. Now, for it to be a breakaway gap, it needs to keep going. But on the first day you see this, when you see a gap like this is what you're thinking, okay, we've had a decent uptrend. This is the perfect place to have a breakaway gap. And that breakaway gap usually happens about in the middle of the uptrend. So you could, just throw a line on that, or any way that you want to measure this. You could measure from, down here to here to, sorry, there. That's the first part of the uptrend, because these usually happen about halfway through the trend. So you can just grab that, move it up to here. That'll give you a target right up here, pretty much exactly on S&P 500. That'll be new all-time highs. I mean, this would be, so there is no reason not to get really bullish on the day that gap happened. Unfortunately, this is now a breakaway gap that's failing. Maybe it happened too close to the end of the month when all the rebalancing and everything has been going on that we talked about earlier. For those who just showed up, Jay and I were talking about the institutions rebalancing their portfolios, window dressing their portfolios, selling off the junk and trying to put stuff in there that looks better to their clients. That happens at the end of quarters. Even happens a little bit at the end of months, but definitely happens at the end of quarters. And that's what we saw into the close today. And we should look at an intraday chart and get a better look at that. But you can see after this gap up, yesterday was a bit of an indecisive day. It was almost an inside day here. It almost closed this little gap. Came pretty close to it. So yesterday was not so bad. That's fine. Okay, we'll consolidate a little bit and then we can continue higher. That's not what we got today, though. We got this big, ugly red candle here. And most of this ugly red candle was actually the sell-off into the close. So let's look at that. We'll look at a 5-minute chart. So you can see, when did this start? This started here at about 10 after 3. And they just sold hard. Really hard. And look at this volume. If we compare this volume, this is nearly or just over 15 million shares on the SPY. You know what? Let's go to a 15-minute chart so we can compare this to some of the previous days. Look how much volume was done in the last 15 minutes compared to the last 15 minutes of the day before. Almost 3 times as much volume. See, look at, we had about 8 million shares done in the last 15 minutes yesterday. 8 million shares the day before that. 8 million shares the day before that. So, our average closing volume is around 8 million shares, right? Well, today, in the last 15 minutes, we had 24 million shares of SPY traded hands. So this is clearly institutional trading. Like DTG just said in the chat, 10.2 billion market on close, sell side. He says very alarming. I'm not alarmed because I know that this sort of institutional shenanigans goes on. Now you can see here in the after hours, we've bounced a bit. I would have expected a stronger bounce. And we may get that overnight. So, we have reason to be, yes, quarterly rebalance, absolutely. They're throwing out the junk, and it doesn't look like they were buying much of anything, though. This is probably, a lot of what, throwing out a lot of what they consider junk or perhaps losing trades that they don't want people to see. This is the important thing, right? They're trying to make their book look better because, this is when their clients get to look at their book. What are you holding in your book right now? So there's stuff in there that they don't want people to see. And they were selling all that stuff off at the end of the close. I'm a little surprised that they waited so late to do it. But this was totally about the rebalancing. There was no news I saw come across the wire to account for this. I could be wrong. Maybe I missed something. If anybody knows something, please let me know. But we'll find out for sure tomorrow. Tomorrow's the first of the month, and the first of the month tends to be a really strong day. I would not be one bit surprised to see us rally strongly tomorrow. Let's take a quick look at the Qs, and I'll tell you what I did. So right near the close, I was a tad early, and then I averaged down. I bought calls that expire tomorrow on the TQQQ. So that's a 3x leverage on the QQQ. And I bought some a little bit early, probably right in around here. And then I bought some, I'm almost nailed the low. I averaged down a little bit there. So I'm currently in the money on those. And, you know, because I'm really expecting a rally tomorrow. I saw this happening. I'm like, this move is getting so overdone. This, you know, this is just a rebalancing thing. They're going to start buying this back tomorrow. So I could be totally wrong, and that's fine. You know, it's just a trade. But I would be surprised if we don't see a rally tomorrow. You know, that starts overnight. Now, there could be some news event that changes everything there, right? You know, something could happen in Ukraine. You know, who knows? But let's go back to the daily here. So here's the daily of the Qs, and there's some interesting action here. So obviously we have the double bottom, the really nice rally all the way up here. Really only one down day in this. I believe this is 11 days. Again, we have that that breakaway gap, or potential breakaway gap, I guess we should call that now, seeing as it's failed. And a 2-day pullback. Notice where that breakaway gap went up to before it, you know, it halted. It went right to the 618 Fibonacci retracement of the retracement from here down to this low. It goes right up, touches that 618 retracement, and then pulls back. But now look what's right below us here. We've got a minor support level here. You know, this level has seen some interaction with price a number of times in the past. We've also got the 50% retracement right here as well. So I think we've got a little support here. This sort of adds some fuel to my thesis that we are going to see a bounce tomorrow. Let's move on to IWM. I don't know if you saw the other day, I posted a chart of this. I posted the chart on Tuesday morning when this bull flag was starting to break out. I noticed we were, so it was in the pre-market when I was looking at it, we were right about here. I'm like, this bull flag is starting to break out in the pre-market here. This is interesting. And then we've got this resistance. The resistance at 208 is just above. I bet there's a good chance we break through there. And then after I had posted this, it did in the pre-market, you know, get right up to, or near the open, got right up to that 208 level and pretty much opened right at 208, and then just kept going. Very, very strong, right? You know, you've got the bull flag breakout, you open right above this resistance, and you just keep going up. And if we look at that day on an intraday chart, we'll just see we trended up all day long. This was beautiful, and I thought, wow, this is fantastic. This thing is really going to take off tomorrow. And then, of course, tomorrow we get this little tiny gap down, and they sold it all day. And what an ugly candle that is. The only good thing about that candle is that it pretty much closed right near that resistance level. And then today, you know, it opened down, we gapped down a little bit, we tried to go up, we failed right around the resistance, and, you know, came down, and then, you know, I mean, we all know what happened into the close. We can look at a 5-minute chart of this and see that this sold, or this is the 15, sorry. But you can see that, I mean, this sold off right into the close as well, along with everything else. It's not faring as well as some of the others right now, but, you know, we're getting laid into the after hours here, so we shouldn't expect to see much more action. But again, I mean, look at this volume, huge volume in this. So, yeah, that's our major indices. Some of the others, the others, especially in the Russell, are kind of interesting. So this one here is the Russell 2000 Value Index. This is interesting because it's still above the 21-day moving average. I think most of the indices are actually, and it hasn't reached this support level yet. Again, this sort of makes me think that this support level is going to hold here. You know, it looks pretty good. I mean, there's a really good chance that this bounces, and that our uptrend or attempted uptrend here stays intact, right? So that's on the value. Let's look at the growth. So this is Russell 2000 growth. You can see we've built this base. I suppose we could probably, we could extend this base up to here. So we've kind of returned into the base a little bit. But again, minor support level in around here. I want to draw that in actually, because there is kind of something going on here a little bit. It's really minor, this one. And, I'm not going to put much faith into that, but you can see the bull flag in this one as well, right? That we broke out of, and we've returned to the bull flag. A lot of the time, what happens when you return to the bull flag, I'll just draw that line in there. You'll come down to the breakout level, which is right about where we are now, and then turn back up. And it gives people a second chance, or anybody who's a little more conservative with their entries, it gives them a second chance to get in, and then this turns up. So I still think we've got a decent chance of turning up and running up some more. So that was the growth, and then there are the micro caps. So these are the super small caps, right? The micro caps. And this looks reasonably healthy as well. It's still holding above the 21-day moving average. As long as we're above the 21, or as a consolation prize above the 50-day average right here, which is the green line, I'm still reasonably bullish on this. I'm cautious and concerned, right? This is 2 hard days of pullback, which is not great after a move like we saw. But there's still a reason to believe that we can turn and go up here. So I'm not throwing in the towel just yet. Let's look at some of our commodities really quickly. Let's start with oil. And you can see that oil is still holding its uptrend. Just barely, though. Coming into the 50-day moving average here, it's drawn this kind of pennant. This has really got to, get moving up. One more down day on oil, and this probably really starts to break down, and this could break down quite quickly. So I'll be watching this closely tomorrow. Gold is a little messy, but holding this major support level here. The level itself is in 1911, so it's basically 1900. Holding that level so far, trying to turn up from there, but looking pretty indecisive. So hard to make a call on this just yet. Silver is kind of messy as well. I think silver is even messier than gold. Yeah. This is sort of, you could look at a big bull flag there. I don't know if you guys see that, you'd maybe draw that something like this. If you're wanting to see that, see a bull flag there. I don't know. It's, again, like I said, kind of messy. Copper is looking quite interesting. And you've heard me talk about a lot of these commodities, right? We went into them in a lot of detail last time. But copper's got this pattern that I like, how you come up into resistance and it failed quickly, right? But then we came down to the 50-day moving average. It came right back up into that resistance, and now it's consolidating just under that resistance. I love to see that kind of price action because, it's building some strength under here. And I want to draw another line under here. Kind of draw something like that. Sort of making a little bit of a triangle in here. A little more, maybe another week or so of consolidation in here, and then break out. This is definitely a breakout I will be adding to my copper positions in. I currently have some calls on Freeport-McMoRan, which is a big copper miner. That's my favorite play in the copper space. There are others, and I mentioned a lot of them in the session 2 weeks ago. That's it for commodities. Let's quickly go through some of these sector ETFs. So this is the energy ETF. So lots of energy companies in here. You can see that it looks a lot like crude, of course. The uptrend is still intact. I think this looks a little healthier than crude, actually. And we could be very near to breaking out to the upside on this. However, crude's a little sketchy right now with the big release of Big release of oil that Biden announced today. He's releasing up to 1 million barrels a day for the next 6 months. And everybody knows what happens 5 months from now, right? 5 months from now is the midterm elections. So no coincidence that, his timing on this is like, yeah, we'll release a bunch of oil for the next 6 months. Obviously, he's trying to get inflation under control. He's trying to get gas prices under control, because I'm sure everybody is blaming him for the price of gas every time they go to the gas station. So he's going to be playing around, trying to do something with that. But long term, especially in the very long term, I'm still really bullish on the price of oil. He can draw down the strategic petroleum reserve all he wants, but at some point it's got to be filled up again, and it's probably going to get filled up at higher prices. So in the long term, drawing this thing down is actually bullish for the price of oil. Okay, what do we got? Metals and mining. This one still in its uptrend, taking a break. That's fine. Wouldn't be surprised to see this uptrend continue. Industrials are boring. Consumer discretionary, not looking great here. The way this rolled over, it kind of looks like, some of the indices we looked at. It's got to find support in this area here and turn back up. We don't want to see these discretionaries roll over. That's probably hinting that the economy is not doing well, or is not going to do well. Financials, same thing there. Really rolled over, and that's not good. So we want to see these find some support really soon and turn back up. Tech. Tech was really strong in that rally, right? It's pulled back. It's closed that little tiny gap. We've got the 200-day moving average just below, and what should be a bit of a minor support zone. I see I drew that line over from there. Let's bring that across, because that one is working. Okay. Wouldn't be surprised to see some support here. Communications is, this got hammered so badly. Had a half decent rally, but still kind of like not out of the woods on this. This has got so much work to do, a lot of catching up to do. So not a place I'm really comfortable being right now. Healthcare, I don't think there was much going on there. Healthcare is doing okay, actually. The uptrend there is still intact, not that far off of the all-time high. If this turns up, this might be a place you want to be. Unfortunately, healthcare, everything we're looking at now are all the defensive sectors, right? So ideally we want to see these underperform. We don't want to see the defenses doing well. Staples, another defensive sector, that one's been pretty strong, and utilities has just been on a huge tear. Look at this thing. This is crazy. This thing is getting parabolic here. Nice breakout from a flag here, right? Wish I'd drawn this in. Well, actually, this flag was, I guess it was, this flag was being built last time we were here. I don't usually spend a whole lot of time looking at utilities because they move kind of slow normally. But playing this flag breakout would have been a really nice move. There's still some left in this. Let's see what we've got left here. I'm going to take this from, I think we'll take that from there. Just duplicate that. Whoops.
Market data connection lost.
Take that from the breakout point, and that gives us a target of $80. So there's still, there's maybe another $5 in this. If the market was to really go risk on, though, if you see tech working really well, the communication is working well, this is going to slow down and actually probably roll over. I wouldn't be surprised if the market goes a little more risk on to see some profit taking in this, and for this to roll over and come back this way. But if the market continues to be risk off, this will continue to move up and probably go up to that target in around 80. So bit of a question mark on this one right now, really dependent on what the overall market does. But we'll get on there. We'll take a look at this in a couple of weeks and see, see what happened there. If we quickly go to some of the industry groups, so this is the oil services. You can see this is strong. All these companies in the oil services sector doing really well. The oil exploration and production sector still really strong, doing really well. TAN, the solar ETF, is still consolidating. There could be a play here. I would keep an eye on this consolidation. See which way this breaks out, because once this breaks out of here, it could keep moving in that direction for a while. Semiconductors are still kind of messy. They pulled back. They had the nice rally with tech and everything, but they've pulled back really hard in the last couple of days. But again, like a lot of other things, we've got these moving averages in the support area right where we're at right now. So, we could see a bit of a turn here. What else? The other one I wanted to look at was KWEB, the Chinese internet, because that had that really nice move. But we've been consolidating, had a bad day today, a couple of bad days really, and are threatening to come down to this gap. Now, the top of this gap should act as support when we get there, so we'll have to see. I think that's it for the overall markets and the sectors and some of the bigger industry groups within it. Anybody have any questions on any of that? Okay, if nobody has any questions on that, then it is time to get into your tickers. So when we're checking out your tickers, you can either type them into the chat or just unmute and tell me a story about whatever it is that you wanted to look at. Tell me what you're doing with it. It's good to know, are you investing in it? Are you you trading it? Are you long, short? You're looking to enter? You're looking to exit? Is there anything we should focus on? Anything you're seeing that you want to highlight? So I think earlier DTG asked for something. I'm not seeing it now. Here we go. GME. All right, GameStop. Oh, I'm just going to make notes on these so I can put them into the recording. All right. What has GameStop been up to? Oh, that's interesting. So, it's funny that it only took a day or two of the, what started with tech, the rally that started with tech off the bottom. It only took a day or two for all the meme stocks to really take off again, and for them to jump into GameStop. And I'm not sure if it was this day here or if it was this day here that word first came out that Ryan Cohen was buying. But I know that since then, there have been plenty of reports that he's buying more and continue to buy, and that has definitely fueled this run up. Now we've pulled back for 3 days. Nice looking bull flag, right? Let's take a closer look at that. In fact, let's look at that on a 65-minute chart. Because really, if we're playing GameStop, we should be looking at shorter time frames, and you can see that there's an interesting one here. Let's highlight this. So you got kind of a what's going on? Why isn't that drawing? Whoops. Okay. That wasn't meant to be there. There we go. Okay. So you got a little bit of a pennant here, a little bit of a bull flag, right? And it broke out the bottom of that, but they started buying that right away. And I would say if you were, and you can see a lot of traders did this, right? Once you get past the apex of this little pennant, you can see a lot of traders started to pile in. You can see the volume went up and they piled in there. Now we have a much bigger bull flag going on here. Maybe draw that something like that. Yeah. So, you know, this bull flag right here looks a lot better to me than, you know, this little one. And I think it's fair to target off the lows here. Do something like this, you know, for that flag, and see where that takes us. Because if this breaks out to the upside, and again, this is going to need help from the market though, and it's probably going to need help from some of the directors and insiders of this company. You know, to really get this moving up this far. But you know, this bull flag targets 440-ish. Let's go back to daily. See what that looks like. Yeah, that's a big move. Which we need to bring this down a little bit. Probably breaks out somewhere down around there. 4.25. Would that be all-time high? Not quite. Very close though. Yeah, I mean, there's a chance. I think this is a little much. I think we'd have to have a rip-roaring rally in the overall markets to get this up this high. You know, even if you played this breakout and you got up into here and in around 230, that'd still be a pretty decent move, right? So yeah, there's potential here for good stuff to happen. Anything else on that, Richard? Okay, so Jay's thrown a bunch in here. He's got Neo, SNDL. I think that's a solar, isn't it? AMD. Cool. Was going to look at AMD for NS from the Discord, and PayPal. So we'll keep writing DBX for Ken. Oh, GameStop had news after hours. Okay. Well, then we should be looking. We should go back to. Oh, look at that. Why didn't I notice that on the 65-minute chart? Hey, look at that. Another bull flag. Man, these players in GameStop love their bull flags, don't they? I wonder what's going to happen with this, because I mean, it's kind of running out of time to really do anything in the after hours, right? And you can see that the volume dropping right off. You know, everybody's shutting their computers down and going and doing other things. So this might not break out of this tonight, but if anybody's up really early in the morning when the pre-market opens, you might want to take a look at this and see if this breaks out. Okay. What else we got? All right, let's look at Neo. So Neo for Jay. So it looks like it's been a while since we looked at this one. Got all these support levels from the past that obviously all failed. Let's get one in right there. Got a bit of a level here, minor level there, right? Here, let's get that label out of the way. There, that looks pretty good. Wow, total capitulation here on the bottom. You know, that, see how this just, you know, we're in a downtrend. Get that downtrend in there. So, you know, we had this downtrend and then it totally started to accelerate, and it accelerated a couple of times. You know, kind of accelerated here and accelerated some more, and then really just went crazy, just went parabolic to the downside here, right? And look at the volume come up on the way down. This is total capitulation. When you see this happen, you know, you hear me talking about how I don't like seeing people catch a falling knife, right? This is totally a falling knife. But if you are going to catch a falling knife, this is how you do it. You start drawing these trend lines. You look at this acceleration, and it just gets steeper and steeper. And eventually, I mean, this thing cannot just keep going straight down forever. You see this volume come up, and then all of a sudden, you get this green candle. You get it when it goes red. You know, see this gap down, right? Just like the day before. And then it starts turning green, and it goes what we call red to green. And this starts coming up, and this is a big green candle here. And when you see this, you got to be thinking, this is really interesting. Look at this green volume. And then the next day, it gapped up a ton. So, hopefully, ideally, the best entry on this one was anywhere in this green candle. Ideally, when it gets above the close from the previous day, anything above that is a good entry. And if you want to be a little more conservative, you can enter when it gets above the open of the previous day. But ideally, you get in on that first day, because often, very often actually, these will gap up like this one did the day after that. Because people are looking at their charts at the end of the day and see this happen with this this huge volume, this steep downtrend. They all start jumping in, and beautiful move here. Now, no surprise that we're consolidating right now, and we're consolidating under this minor resistance. This is good. This is healthy. It should take a break after this. And yesterday was a bit of an ugly day. You don't want to see that selling tail on there, and obviously a red day today. But again, supported by the 21-day moving average and that original downtrend. So wouldn't be surprised to see a little more consolidation in here. And we might see that in an area that sort of in this area right here. So if this consolidates a little more in here, and you wanted to add to an entry here, or you wanted to enter this, a breakout above this level, wouldn't be too bad. So that's about 22.75-ish. That's where I'd go in it. If you want to be a little more aggressive, you can maybe buy the bottom of this line, which is around 20.75. That's how I'd get into that if I was going to get in there. But you also got to be up on your Chinese news when you're playing these stock with these Chinese companies. But NIO's a bit of an exception, compared to some of the others. So yeah, this is interesting here. SNDL. Okay, another bull flag. Pot stock, right? I knew this name. All right. Okay, so we're looking at a weekly chart now. So when this IPO'd, steep downtrend, put a bottom in down here. This looks like an interesting level here. We should draw that in. I think that's some major support there. It did eventually break through that once, but right about there, I think. You can see we've had a fair bit of interaction. Prices interacted a lot at this level, whereas at around 46 cents. So very near that 50-cent level, right? That traders love to play around with. But after it put in this nasty low, popped up, couldn't make new highs or anything, and got into a downtrend again. So I want to draw this downtrend in here. I think that's probably a pretty decent. Let's get this up here. I don't like doing that usually. I just don't find that to be terribly accurate when you got that big spike up there. And once I might adjust this once we go back to the daily, which we'll do right now. Let's see how this looks on a daily chart. Yeah, I think something like this. Yeah, it's a little rough. I mean, I just want to, I actually kind of want to pull the whole thing down like that. Yeah, I like that better. Okay. So we have been in a downtrend since February of last year. It's not steep or anything. I mean, although it's pulled back from where we pull off from $4, came down under 50 cents. But it's put in some fairly decent bottoming action here, and it has just recently put in a higher high. So we had a low, we had a higher high here, we've had a higher low, now we've got a higher high. If it can continue to make a series of these higher highs and higher lows, good stuff, right? Let's just get the start of a trend going here. Just for fun, have that on there. And in the short term on this, I guess we should get some horizontal resistance levels in here as well. This one is kind of okay. Somewhere in there-ish. Oh, that's going to be a problem. That one there is probably going to be more of a major problem, I think. Yeah, at $1.50. I bet you it has an easier time getting through $1 than it does through $1.50. All right. In the short term, we should probably, I'm going to go 65 minutes on this one, draw in this bull flag. Let's draw that in something like that. Yeah, actually, I want to pull that down there. Yeah. That looks pretty good. So yeah, if this breaks to the upside of this bull flag, I think we can easily see a run up to around $1. See what happens there. Maybe it consolidates a little bit and then breaks out of the dollar. We'll go back to the daily. I want to see where this bull flag measures out to. I bet you this is going to take us right to about $1.50. So we'll go off the low here. There's our flag, something like that. Our flagpole, sorry. And oops, let's get that so we can get this measurement. So it's going to break out from somewhere around here. And sure enough, that takes us right up to around $1.50 where we've got that major resistance. This could be a nice little play. And, you know, if you want to get in this long term, this you know, it could be a half decent place to start a position. I mean, down here would have been nicer. A little break, you know, this little consolidation area here, once it broke out of that, that would have been an excellent entry right there. But this is your consolation price, you know, playing the breakout of this bull flag. Watch out when it gets to $1.50 though. If it starts to roll over hard like it did here, I would bail on this position. And DTG says, Sundial shares dilute every time they go up, hence the $1 billion float. Okay, that's a really good observation. And that's something you want to watch out for. Is that what's happening every time? Is that like what happened here? You know, when it popped up nicely, probably what happened right there. You know, almost definitely what happened right here. I bet you this was the dilution right here, right? I mean, why wouldn't they? They've just come off of 14 cents. They go all the way to $4. It'd almost be irresponsible if they didn't do an offering somewhere up in here, right? I know it's no good if you're sitting, you know, especially if you're one of the people who bought somewhere in this area here, and they do a secondary here. That's pretty bad for you. You probably hate them for that. But if you're a long-term investor in this company, you should probably be pissed at them if they don't do a secondary offering here. You know, they had a really good opportunity to you know, get a lot of money for the company without doing a ton of dilution, right? So hopefully they let this run a little bit before they do more dilution. All right, what do we got up next? AMD. Okay. So I guess the last time we looked at this, this gap was going to come into play. I see we broke down through that gap. I'll just delete that gap out of there now. We had the beginnings of a downtrend here. So we should extend this line down. Maybe something like that. I mean, that would make sense, right? Come right into that downtrend line and fall off a cliff. Yeah, this is too bad this didn't consolidate up in here. This had a pretty decent run up in here. It would have been nicer to see this consolidate here rather than fall off a cliff like this. I don't know if there was news in this today. This kind of looks news related. because I don't think semis is on the whole. They didn't have a great day either, but they haven't had the semis had a rough couple of days. So anyway, let's go back to AMD. Yeah, the semis are just messy. They're all kind of messy. They're choppy. They seem unsure what to do. This support level in here is holding pretty good. I'm going to actually change that to a major support now. I think when we come back down to this, it's got to bounce here. I'd be really surprised if we cut through this level. Yeah, I mean, it really looks like it just needs more time to consolidate in this area, right? Looks like we got a bit of a level going on here as well. Yeah, I think it's fair to draw a minor support in around here, right off of that one right there. Kind of. Maybe that comes down a little bit to that one. That looks better. Okay. Yeah, a little minor support where it is right now. But really, it could easily come down to 100 and then bounce there. This needs time. It's got work to do in here. I wouldn't be in a hurry to buy this yet, but definitely worth keeping an eye on because it probably is a bit of a deal if it gets back down to 100. So that was AMD and PayPal. Oh, I see a failure right at resistance and the 50-day moving average. Okay. Looks like sometime in the recent past. When was that? I drew that in there. So that was, okay, that was a month ago, just over a month ago, when I drew in what I thought might happen, or what I thought, we'd probably like to see happen, is this continue to consolidate in that area for a while and then break out. So that didn't happen exactly that way. But you can see it broke down below that support line I drawn there, consolidated a bit and retook it quite nicely. Came up into this resistance area, pulled back, came up, found resistance there again, and is now pulling back. So now it's kind of like, is it going to squeeze between these two moving averages? Kind of think it might, and maybe get my little orange pencil out again. Maybe we see a tight consolidation in here before breaking out again. And then that level right there, the top of that gap, might be a problem. Where does this other gap come from? Oh, that gap's from back there. Okay. Because we've got this gap here too, right? I don't know why I didn't draw that in last time. Oh, I know why I didn't draw that in last time. I didn't think it was going to get there anytime soon, probably. So there's the other gap. Yeah, I bet you this. What is that? That 140 level? I bet you that's going to be really problematic. That's definitely something you'd be wanting to keep an eye on. If this breaks out to the upside. But it's this looks like a bottoming process. I just think this process is probably going to take longer than any of us think or want. It might be in this area, for the rest of the year. This is just too big a move down. Look at, this thing was up at over $300 and came down to 90 or pretty near 90. Too big a move and too big a company for this to just spring right back up again. I think this has got to consolidate for a while. There will be trades in here. I'm just not sure how investable this is. Yeah, tough one there. Okay, so Jay, any questions on any of those? I know you said you're at work, so maybe you can't even type. So I'll just move on to some of the others. What do we got? DBX for Ken. So Dropbox. Okay. Wow, lots of broken uptrends here. Okay, we can get rid of this. Let's actually get rid of all these. Actually, you know what I'm going to do is I will move. I guess we'll move that one to there. Doesn't really work much, but whatever. And get rid of that one. A lot of messy action all through here. Okay. Let's get rid of that. Yeah, you know what? I'm going to draw that base back in because this is going to give us some levels to work off in the future. So we had this, it was building a base here. It did break down below it a little bit, but anytime it broke out the bottom of that base, it recovered quickly, except this last time. And but it did put in a double bottom here. It came back up. We had a nice little bull flag here, and that failed. We're kind of seeing this is becoming a pattern, is it? With we're getting these bull flags that have moved up for a couple of days and then failed. So does it retake? And again, we're at the breakout point of the bull flag, right? So we should probably actually draw that one in. So, this bull flag, we would have drawn this in looking something like this. I mean, we might have, we can either draw it in, we can just draw it in as, flat like that, or we could, there is a bit of an upward angle into this, something like that. The important level here is like the breakout level, which is, right around here where price came down to today. If we get a bounce here, without breaking, say, this lower line, and this starts to turn back up, then the bull flag is still intact, and we could still, target off of this. So, our target on this is going to be something like, so breakout level up here around 27, which is just above this little resistance level, and this is a minor resistance level. So, yeah, I can see if this turns back up, it could easily make a move to 27. But I would watch out for the top of this base that was built, because we might see some resistance in there. I'm actually seeing these levels back here that line up with these. So I'm gonna draw that in as well, because this may come into play on the way back up. So if you look at these levels back in here, it's going to line in across those, and notice how they work perfectly, with a minor exception, right up here in this space. So yeah, this 2550 is an area you're going to watch out for if this turns back up. Now, on the downside of this, if this fails completely, there's not a lot of support to hold this until it gets to this trend line, or maybe even down at these pivots right here. So if you're in this, you really want to see this turn up in the next day. If you're looking to buy, maybe you want to see it break all the way down to here. I don't know. I'd still want to see this turn up here. It'd be really healthy if this turned up now. Okay, so Jay says no questions. Pretty much have the same view except for PayPal. Haven't thought about consolidating for the rest of the year. Yeah, okay. I mean, that's just sort of, I could be totally wrong on that, Jay, but I think that is something that you should kind of have in the back of your head a little bit. It is entirely possible too, because it is PayPal, it's a big company. If financials sort of start getting it together, they're going to take PayPal with them, and maybe you do kind of get, a bit of that V bottom there. I'll just go back to PayPal really quick. Because if this did turn, well, it'd be more of a U bottom. But if this did started to turn up quickly from here, it would almost be a V bottom, right? But that's really going to need help from the market itself and from financials. You're going to need financials to really start working here, to get PayPal going. So that's something to keep an eye on as well. And so back to DBX, which I think we're pretty much done with there. I don't think, I think I pretty much covered everything I can on DBX. What else we got? Oh, you're welcome, Ken. Any good entry? Oh, so Ken, sorry, Jay, sorry, is asking any good entry points on MP, LTBR, and LAC. Oh, I bet you the entry points in LAC. That's Lithium America, right? That's probably passed us by, I bet. Same with MP. MP's lithium too. Here, let me just write these down. LTBR and LAC. All right, MP. Yeah, see, that broke out, and it gave us a second chance right there, right? There was your entry, that hammer. We'll take a closer look at that. I'm just going to change this all-time high into minor resistance. Oops. So yeah, this is it's looking pretty healthy, this one. The uptrend is definitely accelerating, right? I mean, you can see that without me drawing in these lines, I'm sure. But you know, let's get the uptrend in here, and you can see the acceleration of this uptrend. So that's something we want to be careful about. Because this, you know, this uptrend has really started to accelerate. Oops, I missed this one. There we go. That's close enough. So yeah, so you had, you know, I had all this kind of, you know, consolidation action within this longer time frame uptrend. I would say when it broke above this level in around here, would have been a decent place to buy. And then, you know, you should have been watching this all-time high here or here. You know, maybe you could have added to your position here. Once you got this hammer candle here, so, you know, you had this sort of 2-day consolidation that's kind of like a really small bull flag. Tough to play a bull flag when it's only 2 days long. But, you know, you had this move down, and then you went right back up again and drew this hammer. You had to know when you see that you're going to have some more upside. Now, what's a little scary about this is these selling wicks. You know, when it goes just like this is a, you know, this is good when you see price come down and then go back up. This is bad when we see price go up and then come down. And we got 2 days in a row of that. So that's not ideal. So this may give you a better entry. So a better entry, I mean, this may break this trend and come down to here. Problem is, if it does that, it's shown you weakness. And you don't want to be buying the weakness right away, because it really could turn into a falling knife. Does it find support right here? Probably. I mean, this is the first place we'd look for support, but we want some confirmation rather than just buying here. Oh, there should be support here, I'll just buy here. Wait for it to confirm, and that means you're going to have to pay a little bit more. You want to see it turn up from there, because if it doesn't find support there, it probably doesn't find support until down here on this trend line. So that's what I'd watch out for on MP. LTBR. Is this another lithium stock? I'm not familiar at all with this one. Whoa. I think we need to look way out in time on this, don't we? Ooh. Wow, this thing has done splits. So split adjusted, this was as high as $4,000, and now it's at $8,000. Wow. I wouldn't touch this thing personally. I would stay as far when they do this, when you see this, it's just sort of like, this is a poorly managed company. I'd love to have, Nick take a look at the financials of this thing, and because I bet he probably wouldn't have good things to say about that. You know, unless there's been like, you know, the management changes in this, and maybe some changes in the board as well. Yeah, this is not something you want to be in. Yeah, okay. Let's go to a weekly. Probably need a level up and around. If you do get in this, watch out for these levels here. I'm not going to draw them in. Yeah, I'm totally turned off on this thing. Sorry, I am so biased against this now after looking at that monthly chart. Yeah, no, sorry. Next, LAC. Okay, so this one, you know, this has been in a nice uptrend ever since COVID. Really, I mean, this is, you know, mostly been in an uptrend since it IPO'd. I mean, it sold off initially from the IPO, put in a nice basing pattern here. And, you know, ever since it broke out of the base, really, this has been in a long uptrend. That uptrend has accelerated recently. So let's get this original trend in here, which is kind of something like this. And, you know, we'll get some of these accelerated uptrends in here. You know, you've got this really steep COVID uptrend that you see on a lot of stocks, and then you've got that consolidation afterwards. I think take this from here, let's go here, something like that. Actually, here, I see it. That pullback right there. A lot of them had this pullback that worked well for drawing uptrends. They've been fairly well, the uptrends have been fairly well behaved on this pullback, that pullback, when was it? In June. Yeah, you'll see the same pullback. Well, here, zoom in a little more here. A lot of stocks have this same pullback here in June, and a lot of them have uptrends that work well if you use that as a starting point. And then tighten that up right there. Something like that. Okay, good. Oops, I missed. There. Okay. Okay, so we've established this is in a long-term uptrend. Excellent. We put in an all-time high back in November. So that's definitely a level we want to watch out for. And we can see that we're coming into that, right? So let's get that all-time high there. That is right there. That's potential resistance. We can see we had a bull flag a few days ago. Nice looking bull flag. Jay, where were you with this a couple of days ago? And this one worked. It worked well and continues to work today. I mean, it had a little bit of pullback intraday, not surprising. And let's see if that pullback, let's look at a 5-minute chart on this, because I want to see if that pullback was just in the last part of the day. And yes, it was. So this basically trended up all day long, and it didn't pull back at all until, you know, the rest of the market started selling off at the end of the day. So very healthy move here out of this bull flag. You know, let's see this come up to here, maybe consolidate for a few days to a week, right up in this area. You know, if this can do something like this, boom, and away you go, right? Let's turn that into an arrow just for fun. There we go. I could see this going much higher if this can get out above all-time highs here. And look at the volume the last 2 days. This is some serious buying in here. What's our average volume? Our average volume is in around 3.5 million shares, and this has done over 15 million the last 2 days. Has it ever seen that? Yeah, it hasn't seen that kind of volume since it peaked out right back here in January of 2021. Interesting. Yeah, this is a serious move it's got going on here. How do you get in it now, though? I mean, to get in it now in a way you're kind of chasing. I think. Sorry, rid of them. I think either you kind of wait for this consolidation, see if it consolidates here, or if it even just blasts through. This is sort of higher risk. You got to pay a little more. Just buy it, and because it looks so strong. Or wait and see if you get a pullback down into here, like we've seen on some of these other bull flags. Pull back down into here around 34, and then a turn up. That could be a good place to buy. So it may come down here something like this, and then turn up and go. So yeah, either a buy down here, or buy it tomorrow, or wait until you see a breakout out of that. Those are the sort of the three ways that I would think about getting into this. But you are a little bit late to the party, so I think you want to be a little bit careful on this. All right. So that's LAC. DTG wants to look at Tesla. Okay. Look, more bull flags. I mean, it's good that we're seeing a lot of bull flags, right? I mean, that's bullish, obviously. It's telling us there's some risk on mood in this market. So we've got a bull flag. We've got, what we could call a breakaway gap. The breakaway gap in Tesla, unlike, some of the other breakaway gaps we've seen today, is still intact. Richard, did you say anything about Tesla? I can't find your note. He has a bear bias. That's interesting. That's a really contrarian position. I get it. It came up to 1100 and has stalled, but it's still, it's a bear flag after a bear flag and breakaway gap move. You're probably thinking this turns into an island reversal. And I can see that. I get that. I totally understand that thinking. Let's just draw some pictures on this. So, we got our bear flag there. I want to, just for fun, measure that bear flag. So from down around here to there. Broke out right there, that level. That puts our target right on exactly 1400. I love when they line up on big, important levels like that. Well, that probably tends to give me too much, makes me too bullish that it's going to go there. So there you go. There's your target on that bear flag. 1450 or 1400. Sorry. Of course, it's got to get through all-time highs, to get to 1400. Now, do we call this action over the couple of days here? Seeing big, yeah. I'm not surprised you're seeing big sell orders on the tape the last couple of days, right? This is pulled back, but there are still buyers in there. This is not anywhere near as nasty a red candle today as most other stocks have. And really, what was our high on the day here? 1102, and where did it close? 1077. That's a tight range for this. Like our ATR percent on this over the short term is 5%. What was our range today? It's going to measure the range today. So from there to there. So that only did half an ATR today. Looks like the same yesterday. Half an ATR yesterday, not quite a full ATR the day before that. It's consolidating here, and it's consolidating after making all these strong moves and these nice patterns. That is not unhealthy. What would be unhealthy if it starts to close this gap, which we should draw in. Actually, we can get rid of this gap here because that one's all been closed up a number of times. And let's draw this gap in. Oops, that's the wrong kind of gap. There we go. All right, so if we pull back tomorrow and we fail to support at the top of the gap, then we have to look to the bottom of the gap. And then we can also extend a line here across the apex of that bull flag, you know, for another final level of support. So yeah, if this is gonna, you know, either this turns up right away or it comes down and it tests this gap. If this turns up right away, then you know, you've got to be bullish on this. You've got to kind of throw your thesis out, especially if you get above these little highs right here. I should probably be drawing this. If you're drawing it on your charts, maybe draw it in the, you know, these tight little areas. Draw it in on a lower time frame. So yeah, there's some, you know, lots of levels here to watch out for, and see what happens. And don't be afraid to change your thesis. And I won't be afraid to change mine either. But yeah, you know, if you commit really heavily to a bear thesis here, and this turns up and breaks through here, you've got to be willing to admit you're wrong fairly quickly, because I bet you this could move pretty quick. You know, if not all-time highs, but definitely to 1200. Tesla loves to pause at these 100 levels, and usually about $10 before the 100 level, right? You know, so this could go to 1190, 1195, and then, you know, turn back or consolidate a bit. But yeah, this is going to be interesting action in Tesla over the next few days. I think this is worth keeping a really close eye on, and there'll be really good day trades in here, I think, around these levels. So yeah, thanks for pointing this out, because I don't pay a ton of attention to Tesla usually, even though I've got a long-term position in it like everybody else. But you know, I try not to look at it too much. Yeah, look at that. Look how that level, see this level, this high, these highs here lined up perfectly with those two highs there. That might be a little tougher to get through right there. I want to extend this line across. There we go. Blow off top. Yeah, maybe, but it doesn't have the volume, right? Look at the volume on the way up in the bull flag. You know, this rally here, right? Rising volume. And then what you're calling this basically a blow off top, or this here. We've got 2-3 days of blow off top. What is happening to the volume when you're calling this a blow off top? The volume's declining. Here's your high volume day. You know, if you call this a blow off top, then I'd be a lot more willing to agree with you. But no, it continued to go up more. It had, you know, had the breakaway gap out of this bull flag and declining volume in a consolidation. This is all exactly what we'd expect to see. So yeah, I'm gonna, if you're already short this, I hope I'm, you know, for your sake that I'm wrong, but I think this is going higher. Be interesting to see who's right. But yeah, don't forget to pay attention to that volume. That volume, you know, is so important. And even here, look at the RSI. I don't usually like going back this far in our RSI, but if we look at this high here, or these highs here where it found resistance, RSI is higher now. So, you know, that's a positive sign. It's got more momentum this time than it did last time, right? When it was up in these areas. So yeah, I'm pretty bullish on this, but I'm totally willing to be wrong. Okay, let's move on to Jess has asked for CDMO. Has a long position since 2020, considering taking some profit. All right. What was that CDMO? So biotech. Okay. Biotech is so scary. So obviously we have some pretty strong resistance right here. We're just under that resistance level now. So we'll get that drawn in a sec. I just want to go back for it. Oh, wow, this company's been around a while, eh? I see a couple of splits. Wow, this company's been around forever. Since the 80s. 88, wow. So yeah, as is fairly typical with biotechs, you know, kind of long-term downtrend, you've got splits. So, you know, I mean, this one split adjusted as high as like $600. It's not as bad as that other one we looked at. This one really seems to be turning the corner, right? Nice rounding bottom on this. Yeah, I like this better than the last one that we saw that had split a bunch of times and got really bad. This is definitely making some effort to recover from all of that. Do they have a drug that's getting close or something? This bottoming action here is really quite interesting over the long term. But this level here, you know, we see this so many times in the past too. So I'm gonna draw that in as a really important level. It's right about there, right? All right. And then, you know, we've got a pretty decent uptrend that we should probably draw in. Keeping in mind that all this stuff is coming off a monthly chart, right? Kind of something like that. You know, uptrend sort of accelerates. We'll get that right there. All right. This level. That. Now we'll go to a weekly and see. Yeah, okay. Let's get one of these over here. Okay. Now let's go to a daily. All right. So you can see these uptrends that we've drawn in, more or less intact, poked through, retook it. So that's cool. That's healthy. You've got that 32 level, obviously an important level from, you know, forever in this company. There's a level right here too that we should get in here where this 23. That's a kind of a minor level, but that one is obviously important. So what do we think about this? You know, we're in an uptrend, but we have been consolidating. We can almost call this a head and shoulders. If you look here, you've got a, whoops. You have a shoulder here. Sorry, it's hard to write letters with a mouse. The head right there and kind of a double shoulder going on here. So, you know, maybe if this was a head and shoulders, maybe it has failed. I'd like failed head and shoulders. So if we were going to draw that as a, you know, if this was going to be a head and shoulders, our neckline would look something like this. Right about like that. You know, maybe we'll just sort of tweak that up a little bit, right? And that'd give us a down, you know, so that'd be a head and shoulders top. That'd give us a downside target. We'll draw that in. Hopefully you don't need to know this, but it is definitely something you're going to want to pay attention to, because it's, in a way, it's kind of still in play, right? It hasn't completely recovered from this. So from wherever it breaks out, like if this breakout right here, you can see where this neckline tried to break right here, right? And instantly went back up. And then actually neckline should probably be there. So if the neckline had broken here, look at that. That target would have been right on that trend line. But it didn't. It didn't break the neckline. It started to go up again. But it couldn't make a higher high yet. You really need to see it get above this 23 level to have any confidence in this. Because it could roll over again. If it comes back down to that neckline and breaks again, then you kind of got to move the target down farther. You know, if it was to, you know, break, say, around here, it gives you an even lower target, you know, around 850. But still close enough to this trend line that might actually provide some support if it broke down. If you can see, if you know, some consolidation in here for a few days, maybe a few days or a week, and then it breaks out above this level, that would be a pretty sweet breakout. You know, that would definitely be a playable breakout. Even if it broke out of here tomorrow, you know, 2 days of consolidation, and then break out of there, that would be good. But I wouldn't be surprised to see this consolidate a couple more days in here before it breaks out or breaks down. So the jury is out on this guy in the very short term. In the long term, you are in an uptrend, right? You know, multiple uptrends, you know, intermediate time frame uptrend and long-term uptrend. So this should go higher. I mean, that's where your bias should be. But this kind of messy head and shoulders here could be problematic. And again, that 32 level as well, watch out for that, because that's going to be fairly strong resistance. So hopefully that's helpful. So that was CDMO. And I think I've got everybody's tickers. So if anybody else has anything they want to throw in, any last minute tickers, everybody's saying thank you, everybody. You're welcome, everybody. I'm glad you came along. Hopefully you enjoyed that. Just before we go, I guess we'll look at our calendar coming up. Of course, you know that this calendar is posted in the Live Mentor Sessions channel. But here we go. We are here today. Nick is changing up his live session thing. He's actually going to be releasing some videos that he's going to record. So he should have one out on Sunday and then the following Sunday. 2 weeks from today, we'll do another ticker talk. And I guess, yeah, on the 10th here, you should probably keep an eye out for a video for me, either either the Saturday or Sunday, or if the weather is super nice on that weekend, it might not come out until Monday. And then Thursday, the 14th, we'll do another ticker talk. The Thursday after that, we'll do a option education session again. I'm going to do bull and bear spreads, which I think should be pretty interesting because there's a lot of different ways to play those as well. And then Nick will be doing a live session towards the end of the month on the 24th, and then I've got another ticker talk. So that's what we got coming up. Thank you, everybody. And we will see you all in the Discord. And for everybody watching in the recording, oh, you know what? I've got one more ticker to do I almost missed Dragon Yundami's ticker. He wanted to look at AMPH. I think that's Amphenol. AMPH. Oh, Amphastar Pharmaceuticals. Wow, look at that. This must have something going on. I guess Ken has heard of this. Do you know? This has got to be something news related. I mean, look at the base that this broke out of. This is actually pretty sweet. So Dragon, hopefully you are already in this, because certainly can't advise going in this now. This has totally gone parabolic. Oh, we're looking at a weekly, aren't we? Okay, so yeah, beautiful base there. Yeah, maybe there will be an entry in this coming up. Really nice. But the big question is, I mean, how do you get in this now? Because you've got this accelerated trend. I guess, if this pulls back onto the trend line here and then takes off, that might be a decent entry. this is a nice looking chart. I mean, this is, this reminds me a little bit of Costco. It hasn't gone on as long as Costco has, but kind of similar. I mean, this is how Costco started, right? Out of a long base and then just started going up and won't stop. Setting up bull flags along the way, lots of entries along the way. So if you look at some of these previous entries, this last one wasn't great, but draw when this thing consolidates, just draw a little line across the consolidation. And so in this one, you had a couple of fake outs in your consolidations. But if you draw little lines on these consolidations, and just buy it when it breaks out above those. So maybe there's a couple of ways to draw that consolidation there. And look at that, it's acting as support today. But you can go back and look at how this has reacted on the consolidations in the past. That one's sort of interesting there. Yeah, this has given opportunities. See these tight little consolidations. There's one right here. I'll just actually highlight some of these as little bases. This one, for instance. See how this kind of got tight there for 3 days and then it gapped up? There was another one. Where's another one? Oh yeah, here. Got really tight and then gapped up out of there. That could have been a decent buy, even just buy the gap. That could have been a decent entry. Nice tight little consolidation here, right? So these tight little consolidations, when they set up, have given you good entries. And it looks like there's another one setting up right here. So if we draw this right here, an entry could be playing the breakout of that. Obviously these are higher risk because this has already run a lot. It's moving far from the moving averages. This is getting a little extended, but there's strength in here. So yeah, a little scary to either enter now or add, but there still could be some reward here. Okay, Ken knows somebody who works at this company. Go on, Ken, get us some inside information. Actually, no, don't do that. I didn't ask for that. That was a joke. Don't need the SEC pounding down my door. Nobody send me inside information. I don't want to know. I get all the information I need on the chart. Good. It's good that you don't know anything about them either, Ken. All right. So yeah, that was for Dragon. Hopefully that was helpful for you. If you have any more questions, feel free to DM me, shoot me messages in the Discord. And that's it. I'm going to pack it in here. So thanks again, everybody. Enjoy the rest of your night, and we will see you all again soon.
Recording stopped.